Trump's first presidency gave Washington a playbook of hardline tactics.
Trump introduced punitive tariffs on China, as well as trying to rebalance the trade deficit.
Trump's trade war on both China and the U.S. economy, a topic that has sparked widespread debate and analysis. The trade war, initiated in 2018, involved imposing tariffs on hundreds of billions of dollars worth of goods, aiming to address trade imbalances and protect American industries. However, this aggressive economic strategy has led to a ripple effect, influencing global supply chains, consumer prices, and diplomatic relations. The initiation of Trump's trade war in 2018 marked a pivotal moment in U.S.-China relations, driven by a desire to address perceived unfair trade practices. The rationale behind imposing tariffs on Chinese goods was rooted in the belief that these measures would protect American industries and jobs from what was seen as China's manipulation of trade policies. By levying tariffs on hundreds of billions of dollars worth of imports, the Trump administration aimed to reduce the substantial trade deficit with China, which many viewed as detrimental to the U.S. economy.
Beautiful word in the dictionary is tariff.
Trump is focused on raising tariffs to prevent China from shipping many of their goods into the United States.
The expected outcomes included not only a decrease in the trade imbalance, but also a revitalization of domestic manufacturing. However, this trade war also introduced the concept of a global power shift, as countries began to reassess their economic alliances and strategies in response to the escalating tensions. As we examine these intended goals, it becomes clear that the ramifications of this trade war extend far beyond the borders of the United States and China. The unforeseen consequences of the tariffs imposed during Trump's trade war have significantly impacted both the U.S. and China. Initially, the trade deficit was expected to decrease. However, statistics reveal that it fluctuated, with the U.S. trade deficit with China remaining substantial, even reaching $310 billion in 2020. American consumers felt the brunt of the tariffs, as higher prices on imported goods led to increased costs for everyday items, from electronics to clothing. This burden disproportionately affected low- and middle-income households, who found it challenging to absorb these price hikes. Despite the intention to bolster U.S. manufacturing, the gains were minimal. Many manufacturers faced increased costs for raw materials and components, which hindered their competitiveness. In fact, the manufacturing sector saw only modest growth, failing to meet the ambitious goals set forth by the administration. Overall, the tariffs created a complex web of economic repercussions that highlighted the challenges of navigating global trade dynamics. In response to the trade war, China demonstrated remarkable adaptability and resilience, focusing on investments in self-reliance and innovation. Recognizing the need to reduce dependency on U.S. technology and goods, China ramped up efforts to develop its domestic industries, particularly in high-tech sectors. A key area of focus has been the semiconductor industry, which is crucial for powering everything from smartphones to advanced computing systems. By investing heavily in semiconductor manufacturing, China aims to achieve technological independence and bolster its position in the global market. Additionally, China has diversified its trade partnerships, seeking to strengthen economic ties with countries across Asia, Europe, and Africa. This strategic pivot not only mitigates the impact of U.S. tariffs, but also enhances China's influence in global trade networks. As a result, China has not only weathered the storm of the trade war, but has also positioned itself for long-term growth, showcasing its ability to thrive amid challenging economic conditions. The trade war significantly impacted U.S. alliances and relationships with other countries, leading to a cautious stance among traditional allies like Germany and Japan. These nations hesitated to fully align with U.S. policies, concerned about the potential economic repercussions and the unpredictability of American trade strategies. The situation was further complicated by the emergence of Huawei's 5G technology, which became a focal point in international relations. The U.S. campaign against Huawei, citing security risks, prompted many countries to weigh their options carefully, balancing their economic interests with geopolitical alliances. Nations considered the implications of adopting Huawei's technology. They faced a dilemma between aligning with U.S. security concerns and capitalizing on the economic opportunities that China offers. Compared to the tariffs imposed by the U.S., which often resulted in higher costs for consumers and businesses, China's competitive pricing and investment potential became increasingly attractive. This shift in dynamics underscored the complexities of global trade and the evolving landscape of international relations. China's growing presence and influence in Latin America have become increasingly evident through substantial investments in infrastructure and strategic trade agreements. Over the past decade, China has committed billions of dollars to various projects across the region, aiming to enhance connectivity and foster economic development. A notable example is the Peru Megaport project, which is set to transform trade logistics and bolster Peru's position as a key player in the Pacific trade network. This investment not only facilitates the export of Peruvian goods, but also strengthens China's foothold in the region. Additionally, China has been promoting local currency trades in its transactions with Latin American countries, which poses significant implications for the dominance of the US dollar. By encouraging the use of local currencies, China aims to reduce reliance on the dollar, potentially reshaping the financial landscape and challenging the traditional economic order. As a result, China's influence in Latin America continues to grow, altering the dynamics of international trade and finance. China's advancements in technology have significant implications for global power dynamics, particularly as the country emerges as a leader in critical sectors. Currently, China produces over 70% of the world's solar panels and has become the largest manufacturer of electric vehicles, with sales exceeding 3 million units in 2021 alone. This dominance in renewable energy and electric mobility positions China at the forefront of the global transition towards sustainable technologies. Looking ahead, there is a potential future where China leads in critical technologies such as artificial intelligence, quantum computing, and biotechnology, reshaping the competitive landscape. The trade war has played a crucial role in accelerating China's tech ambitions, as US tariffs and restrictions on technology exports prompted Chinese companies to invest heavily in domestic innovation and self-sufficiency. This push for technological independence not only enhances China's economic resilience, but also challenges the established technological hegemony of the United States, signaling a shift in global power dynamics that could redefine international relations in the coming years. The trade war has exposed several weaknesses in US strategies, revealing vulnerabilities in the American economy and its approach to global trade. Initially intended to protect domestic industries, the tariffs imposed on Chinese goods led to unintended consequences, such as increased costs for American consumers and businesses. Many companies faced higher prices for imported materials, which ultimately resulted in reduced competitiveness and profit margins. Additionally, the trade war strained relationships with key allies, who were hesitant to fully support US policies, further isolating America on the global stage. These developments underscored the need for the US to adapt to changing global dynamics, recognizing that a unilateral approach may not yield the desired outcomes. As countries like China continue to innovate and expand their influence, the US must reassess its strategies, focusing on collaboration and multilateralism to effectively navigate the complexities of international trade. Embracing a more flexible and cooperative stance will be essential for maintaining economic strength and global leadership. Thank you for watching.